Hello Sky Traders, welcome back to a new video. This is Mina, your trading coach, and this is your weekly recap. So in this video we're going to discuss and have a recap of what happened over the last week for the NAS 100 or the Nasdaq. So without further ado, let's get started. As what we usually do is we do a top-down analysis, so we move from high time frames like monthly, weekly, to slightly lower time frames like daily and 4 hours chart until we reach out to 1 hour, 15 minutes and 5 minutes to check what are the best entries that we can have in which hours. And we usually do this on our weekly forecast videos, so don't forget to check out. Before we start, need to emphasize a mindset condition or trading condition that happens all over the weeks, months, and days, and this is typically the price condition or price delivery conditions and how price is being delivered across different price levels. So as we usually know that there's like 4 price delivery conditions: expansion, consolidation, retracement, or reversal, right? So let's have a look at how this could be emphasized. If we have 2 price levels and price is trading across those 2 price levels or between those 2 price levels, then we usually see expansion, consolidation, or retracement, and this usually happens to the 50% Fibonacci retracement levels. Another expansion, consolidation, or retracement again, expansion, consolidation, or retracement, expansion until it reaches the upper limit of the trading range if we're in a buy model. If we're in a sell model, expansion in the sell direction, consolidation or slight retracement, expansion, consolidation, retracement, expansion until it reaches like the lower limit of the trading range. Once we are at this critical point, could be a support level, could be order block, could be significant or important level that the price traded to before, what we usually see is 2 models actually. Price try to trade back to this level once, then break through this level, taking out all of the liquidity of the buy orders that were previously placed, then breaking this market structure, slightly consolidation, then expansion. Then continues in the expansion, consolidation, retracement, expansion until reaches the next limit or the next level. This is the first model. Second model is price trading back to this significant level, trying to trade back but creates an order block, so couldn't break through this level. Then expansion, breaking this market structure, consolidation, expansion, consolidation, expansion, and so on and so forth. These are the 2 models that happens whenever we reach an important level. Keep this structure in mind, keep these models in mind while we analyze and during our recap video. So let's remove the drawings and start analyzing. So what do we have in here? On the monthly time frame, clearly in the downtrend. From sentiment point of view, all of the market makers are trying to push the market to the downside. That's because of the news, what's happening in US, increase in interest rate, bear market, everything. From technical point of view, we are breaking market structures with huge pressure in the downside, trying to trade back to the liquidity levels, then continue our push in the downside. We can clearly see this on the monthly time frame. Once we broke this significant level, we tried over the next 3 months to break through it, trade back to this significant level. We built orders in the sell direction and then broke this market structure with a high pressure sell candle. Once we broke this level, we tried to trade back, taking out the liquidity of the sell orders that were previously placed once we broke through this level, and then high pressure sell candle. And check this candle. The wick of this candle is perfectly aligned with the wick of this buy candle at the 1st of March 2022. Why? Because a lot of buy orders were placed at this price level, 12,858. So when price tried to trade back to this important level, creating an order block, or from a retail perspective, it's huge resistance level. Then now we're trading this month, we broke through this market structure, and we're gonna start a new month. So that's also significant because we broke through this market structure. So once the trading starts on Monday, we're gonna see a new month breaking this important market structure. So what we can expect is continuing the downside or trying to trade back again to this significant levels where a lot of buy orders were being placed. Why did I highlight this level? Because it's considered a liquidity pool. Over those 5 consecutive months, a lot of buy orders, a lot of buyers participated in the market, right? So a lot of liquidity rests over and scatter over these levels. And again, as we know, Forex market is manipulative, right? So it's trying to take out all of the traders out of the market. So we're trying to approach liquidity areas and liquidity levels. So if we're going to expect continuation in the downside, we can clearly see that these are the important liquidity levels that markets trying to approach. Between this level and this wick, the wick of the 1st Sep 2020 and the 3rd of Feb 2020, it's a liquidity void. Price never traded back to this level, right? We tried to trade back, but then rejected, creating high pressure buy candle, breaking the market structure, and so on. So this is a really important area. Price didn't or never traded back to this area before. So that's why also I highlighted this as an important level. On the weekly time frame, now we need to remember the structure that we had in our mind, right? What did we say? This is the trading range, expansion, slightly consolidation, another expansion, consolidation, expansion, consolidation, expansion, and then price trade through this level, try to trade back, but couldn't penetrate this area, couldn't take out all of this liquidity order from sell orders, and rejected, breaking this market structure of the high pressure buy candle, high pressure sell candle. Then another high pressure sell candle, breaking this market structure, and what happened? Expansion, retracement, expansion, consolidation, then retracement, expansion, and so on and so forth. So if market is trying to complete this level to reach the lower limit of the trading range, we can expect further move to the downside, right? But again, bear in mind that this is an important area. This is a liquidity void area, right? So market can penetrate through this level, taking out some liquidity, consolidation or slightly retracement, then further expansion in the downside, right? This is typically the model that we've just discussed. When price reach an important level, either price trying to penetrate, then take out all of the liquidity from those sell orders, or creating an order block, breaking the market structure, continuation to the downside. On the daily time frame, when price reached this significant level or important level, price consolidated, right? And we not only call it consolidation, we also call it accumulation, because we know when there's a consolidation, price is trying to collect orders in both directions, right? And when price or the market has enough liquidity to move to a specific direction, we're gonna leave this consolidation area. This happened the 12th of June 2022. Price broke this market structure with a high pressure sell candle, tried to trade back, creating an order block, then further expansion to the downside. Consolidation, trying to trade back to this important level. And because this was an important level, see what's happened? Let's remove the drawings. The same model applies, right? Here, price tried to trade back. Again, tried to take out the liquidity. Price couldn't penetrate this level. Break the market structure with a high pressure sell candle and further expansion to the downside. So it's not only applied to the weekly time frame or the monthly time frame, it's the same concept applied to every single time frame, even the 1 minute time frame. See what happened again here? Price tried to trade back, couldn't penetrate this level, break the market structure with a high pressure sell candle, further expansion to the downside. Here what happened? Price started to trade back to this level, penetrated this time this level, taking out all of the sell orders that were previously placed, then broke through this market structure with a high pressure candle, tried to trade back, then further expansion to the downside. See, we can take like this area and analyze it with the same concept that we've been empathizing. This is the lower limit, this is the upper limit of the trading range. Expansion, consolidation, expansion, retracement, expansion, consolidation, upper limit, price tried to trade, penetrated through its levels, taking out all of the liquidity, all of the sell orders, breaking the market structure, expansion, retracement, expansion, retracement, expansion, and now we broke through this lower limit of the trading range. On the 4 hours time frame, let's remove the drawings to make our chart clean to analyze it. Same concept. Trade back, penetrated through the level, taking out the liquidity, breaking market structure with high pressure sell candle. Consolidation, slightly consolidation, building some orders. Retracement, try to trade back, penetrated to this level, create an order block, further expansion. Here, price tried to trade back to this level, penetrated this level, taking out all of the liquidity, but then this candle closed right before this important level, right? Creating a high pressure sell candle, breaking the market structure, and so on and so forth. So again, the same concept applied to the 4 hours time frame. Even if we drill down to the 1 hour time frame, the same concept. Price tried to trade back, order block, high pressure sell candle, breaking the market structure, and so on and so forth. So this concept is really important. If you understand the price delivery conditions, consolidation, it all starts with a consolidation. To build orders, have the sufficient liquidity to leave the consolidation, expansion, retracement, or reversal. Once you have this structure, along with the price behavior or price delivery, whether price is trying to trade back, taking out the liquidity, or creating an order block to reach the next limit or the next level of the trading range. Go and check your chart. Let me know what you see. Let me know if you see it. It's applied on every single pair, whether it's commodities, whether it's forex, metals, crypto. The same structure is applied. It's just need you to see it in the chart. Go and check your charts and let me know down in the comments if you see it now. And don't forget to watch the weekly forecast. We're going to do a weekly forecast for the Nasdaq 100 as well for the next week to see what potential opportunities we can participate in and at which hours. Thank you so much for watching. See you in the next video.